prices rising on the heels of supply disruption in Libya and increasing expectations of OPEC's supply cut extending into the second half of the year. Now, this comes as big oil companies bet on shale, with ExxonMobil, Shell, Chevron spending a combined $10 billion in shale drilling just this year. Joining us right now is EY Energy Group leader Deborah Byers. Deborah, good to see you. Thanks so much for joining us.
Thanks for having me again.
So there is a shift in energy investments going on. How do you think this will impact oil prices?
Well, I think we've been saying all along the shale revolution is providing almost a cap on prices, and so they're able to ramp up very quickly, as we talked about previously, and so it keeps sort of a cap on price, and so maybe we're not going to see these huge, $100 oil prices again. Yeah,
because more supply means prices go down.
Yeah, Deborah,
exactly.
Deborah, I'm interested in, coming across this with big oil coming into the shale. Does this mean there's going to be some M&A happening? Because some of these shale producers can extract at $39 a barrel, and then they can sell it out here on the futures curve for $50. So is this an opportunity for the big oil to come in and acquire?
Well, obviously, some of that has already happened. ExxonMobil a few years back bought XTO, and a lot of the major oil companies have made some significant moves. I think the focus is going to be on really operating and getting the oil out of the ground even more efficiently, so you have large companies, great balance sheets, a lot of the capital discipline coming in to produce this, and that's going to continue to drive the cost of production down.
And also, Deborah, it's Dagan McDowell. What about Trump regulations in terms of freeing up the ability to produce oil and natural gas in this country? Even if you point to him rolling back the fuel economy standards that were put in place by President Obama, that could at least juice demand for petroleum.
Well, that's true. Certainly, one thing to keep in mind, the entire, the ramp up in production happened during the Obama administration. So, the market forces are able to overcome some of these barriers. I think certainly rolling back some of the regulations that might be a bit more onerous will be helpful. But I think that the biggest regulator is going to be the market itself and the price of oil.
Yeah, and I'm glad you bring that up. The biggest regulator will be the market, and we are starting to see that the U.S. is now exporting oil. Is that another way that we stay energy independent and we consistently ship more and more barrels across?
Well, certainly, you want the market to take the product to its most efficient market. And so what people have to understand is that our refining capacity and what's here in the United States is designed to refine certain types of crude. And, what is being produced is not necessarily everything we can refine through the refineries that we have here. So some of that needs to be exported. We do need to import some of this oil because that's what our refining industry can process. So we need to make sure that we allow that commodity to move efficiently.
I just wanted a quick point, if I'm on the geopolitics of this. I think that what's interesting is the impact of what the president is doing in the administration on deregulation on Russia. It's constantly argued that he's cozying up to Russia and all the stuff that's being pumped out in D.C. But actually, this is exactly what Russia doesn't want, isn't it? The U.S. actually becomes energy independent and actually has the opportunity to replace some of the energy supply that Russia provides Europe.
Yeah, you're right. Well, let's talk about one of the key commodities we are going to export, and that is LNG. That's natural gas, and we have an abundant supply of natural gas, both to supply to the domestic power industry, and so you're seeing the shift from coal to natural gas. That's had a lot of benefits, including emission benefits, and we're also able to we've started exporting LNG, and this is very historic, and those cargoes can go anywhere around the world. And certainly, that does give you some geopolitical power.
Yeah, you mentioned coal. The president is promising to revive the coal industry, bring back mining jobs. We had Murray Energy CEO Bob Murray on the show earlier today. He said he's hopeful about that policy. Listen to this. I want to get your reaction.
When Mr. Trump brings back the jobs in America, we use a lot of electricity in our factories, not much in our homes. Coal will grow back because we're 1/6 the cost of a windmill, and 1/4 the cost of natural gas, and it's reliable. It's there at the power plant every day to keep the lights on and keep our electric power grid reliable. It's a wonderful things that he is doing for America.
What about that, Deborah? How does coal play into the story?
Well, you know, what's happened is the low price of natural gas has really driven the power sector to do what makes the most economic sense, which is to switch from coal generation to natural gas generation. And certainly the actions by the administration might delay some of that, and that will have some short-term benefits to the industry. And look, if you're looking at it as an individual, you know, being able to keep your job for another 2 or 3 years is important. The long run, I think the market forces will push, you know, power generation to natural gas, as well as installed renewable power that is going to continue to come on.
All right, we'll leave it there. Deborah, great to see you. Thanks so much.
Good to see you. Thank you.
Deborah Byers from EY there.